Okay, welcome everyone. Let's take a look at the stock markets. We're going to use technical analysis to really dig into the charts, see what we got going on, try to find some trade ideas. So I'm going to get right into it because I think we're at a key level right now. We're going to look at the triple Qs, which is your tech sector. And I want to zoom in to the daily chart here. And you can see here, we're at a level of resistance, basically, right here about 324.60. You can see that all these reactions that we had in the past on these daily candlesticks, that was resistance. And previously we broke down into this zone and we're trading right back up into it right now. So this area here should prove to be a level of resistance where likely the bounce that we've seen that started really yesterday, it's a 2-day bounce basically, should end right in this area. So I've got 324.60 as kind of the area. Now, again, we're right there, so it wouldn't be uncommon to kind of pop above it intraday, maybe, and close kind of right in this area. Very often when you're right at a key level of resistance, you're going to see some whips through it as they pop through it, run some stops. So just keep that in mind. And then you've also got, this is just the area, really I see it right. It's going to be somewhere right in here where I think we're likely going to get rejected. We could run up to about 326. You can see we've got right up here, we held support right there on the daily a couple days there, and then it was resistance right there. If we zoom into the hourly, you can see that, right there, that 326.20 is where this rally ended and was rejected. So we could run right up to about that area, 326.24 it looks like. But again, we're in a zone of resistance, and I think it's likely we're going to get rejected, but I wouldn't be surprised to see us kind of pop up into this area a little bit and trade in here. Looking at the SPY, we obviously have a gap right here at about 417.80. Top of the gap, that gap would be the kind of the top resistance area, and then we also have gap entry right here, which is about 415. So anywhere in that gap would be the zone of resistance for the SPY. All right, so it's very simple. Anything kind of breaking above that, and we start getting daily closes, even hourly closes, you could keep an eye on that. But you start getting closes above that zone, and it's likely that we've seen that the sell-off was just a brief sell-off, and they're going to run it to all-time new highs. And on the Qs, same right here. Anything above this zone, and I'll be looking at really stopping out of a Q short. Of the Q short trade. And that's just how this works. When you're right at a key level, especially resistance, you can short here. This is where you want to be short with the sell signals that we recently had, but where you're wrong, and you're wrong small, right? So if we start to pop up above here, we know that we're wrong, at least temporarily, and then we can be wrong small, and if we're right, then then you're able to maintain your position if you're already short, or add to or start a position right at a key level where you're likely going to be right away. So again, it's all about taking positions at key levels and then managing the trade and knowing when we're wrong and being wrong small. And so that's what I see on the Qs and the SPY. Top of the zone, a break above this 326.22, and you start getting an hourly close above there, then I would say we're wrong on that Q short, and that's likely a good spot to stop out. And then the SPY, a break above this 417.80, start getting an hourly close above there, and we'll be wrong right there. So that's something to watch for. Now again, watch for whipsaw signals, watch for little intra-hour breaks, or even intraday, depending on how you're trading this. If you're looking for a bigger move to the downside, you might want to wait for the daily close. Okay, maybe you get a couple hours that pop above those levels, but then it sells off and you never get that daily close. That's something that each person has to kind of determine their risk level on that, and how much risk they're willing to take. Okay, we'll take a look at IWM. You can see IWM's coming in for a back test of the broken trend line. there's the trend line from the March 2020 lows. We held support back here, we held support here, and we recently broke down, and they're coming in for a back test. So, I likely would want to see a full back test to short this thing. I think if you get that full back test, that's going to be objective areas to add to a short position. But we did have a pretty solid sell signal, and we have broken down. So this is likely going to be a fleeting bounce, just like we are seeing in the Qs. That's what I think is going to happen. I think we're going to get rejected. This bounce is going to, basically fail in these resistance zones, and we're going to, sell off, probably not today, but continue selling off next week down to the next levels of support. So IWM, I have the next level of support. It's about 204.85. And then we have another level down here at about 192.92. All right, that's really the level I think is a good target for this one. And I do expect that we head down that way in the near future. Okay, one reason I think that is if you look at the daily chart, we have big negative divergence on the IWM. Here's your PPO just completely selling off. Here's your RSI. That's been just fading. And this negative divergence has been playing out for a while. Then you wait for a break of the trend line support, which was right there. We got the breakdown. And, we're getting a little bit of a back test. But I don't think we've really even, I think the down move is just starting. And this is common. You get the first move down, the dip buyers step in and buy the dip. You see a bounce. It doesn't mean that the technicals are still supportive of a continued downward move. And the thing is that a lot of people on up days like this, they think they're wrong when they're swing trading a short position or to the downside. And that's what these moves do. They shake out the shorts. But technically, we haven't recovered the broken trend line. There's no bullish divergence showing up on the daily chart or anything that tells me that we're going to reverse. And we've just started the downward move. So I think there's more to come. And really, I believe that IWM is likely going to trade all the way down here with about a 12.5% correction is really what I'm thinking at this point in time. And that's from where we're at right now. So we obviously could go up a little more and correct a little bit more. We haven't taken a look at financials for a while, and really that's because nothing technically has changed. They haven't broken their uptrend. So financials on the daily chart just have this uptrend right here, and they're just continuing to trend upward. We do have some negative divergence starting to show up right there. So, I think we'll get a break in trend, but ultimately these are the financials have been pretty strong. So we got to see evidence that we're going to break trend. No reason to short this. It's just continuing up until it doesn't. And then looking at all these tech stocks, a lot of them are obviously bouncing a little bit today, giving back a little bit of profit, and that's just how it works. When you're swing trading, you're going to move down, you're going to have bounces. You're going to move down, you're going to have bounces. It's called the slope of hope, and very rarely will you see just a complete straight down move that's just unrelenting. You're almost always going to have counter trend bounces. So here's Tesla. You can see we broke trend. There's your trend line right there. We broke trend recently, so we had a sell signal bouncing off the 200-day moving average. So, we could bounce all the way up to, there's really nowhere where we could have to bounce. We could do a full back test of the trend line all the way up here. It'd be about 677, 680. We could bounce to the, right in here, which would be about 627.40. So there's areas that you could bounce. One way that you could trade it is, if you're an active trader, you could cover your short trade. That's what I did, is I covered my short trade and then, recycle in on on that bounce. If we bounce up to here, maybe recycle in. If you get the full back test, take a full short position. That's one way to do it. Or if you're not as active of a trader or don't, have the time to watch the charts as much, then just ride it out. You can we've got the sell signal. You're going to get bounces along the way. You can ride it out. And I still see us heading down to this 460 area in the near future. Carvana bouncing into, resistance. Looks like it's got to go a little bit higher up to about 240.60 or so. The 200-day moving average is up there. and also a level of resistance that was recently support and broken. So that's going to be an area that you can potentially add to a short position, take a short position if you haven't already. That looks like an area that will likely get rejected on our way down to the next level of support, which is about 201.44. But I really think we're heading down to about 175 right in this area. That's going to likely be my final target for this Carvana short. Chewy bouncing, could bounce up, Chewy could go all the way up to here, which would be about 76.28. So one way that you could trade it again is to just take, cover your short and recycle back in on a short position. If the more you bounce up. But I see the kind of the line of resistance about 75, about 76 bucks. That's about the area I'd be interested in recycling back in if you get back up there. Again, when you start selling though, you never know if you're going to get back there. And this one does, have a bear flag where you've started the flagpole here, you flagged out right there, and now you've continued to drop. So I don't know how much we're going to bounce. I think it's likely the bounce is going to be muted, and we're going to continue lower. Next level of support about 59.70. Peloton is coming into resistance. You can see here, former resistance was right about 90, we'll call it 99 bucks, 98.70, 98.80. You can see right back here, we held the resistance back there. Then we broke above, and it was support all through here, support through here, and support through here. Also support through here. Once you broke that support, basically right here, it was an impulsive breakdown. So we're back testing that today. So that's an objective area to short Peloton. And it might play out. The only thing I don't like about this, if I zoom in on the PPO, you can see we have bullish divergence right there. So this low right here was a divergent low. And so I'm going to stay away from this one. It is an objective area to short this thing, and we might see another move down, but with that bullish divergence right there, I'm just not interested in shorting something that has bullish divergence. So I'm going to stay away, but we could see a little pullback from this level. NEO just bouncing a little bit, but again, we broke support earlier in the week, so no technical change in the bearish posture of NEO. I still think we're heading down to 22. Little bounce today. Likely we're going to bounce up and tag this 34, 87, 35 area, somewhere right in there. Maybe overshoot it a little bit, but I think that's the area that will get rejected. They'll probably close it right at that area as well, keeping everyone guessing. But I still see lower prices. We have big negative divergence on the RSI and the PPO, and that's just starting to play out. You can see we're clearly downtrending recently, so I think we're likely going to continue to downtrend, and down to that 2250 area. AMD still not breaking that key level of support that I'm watching for, so. The next sell signal would come on a nice impulsive break of this 73, 75 area. You can see just the last few days have kind of whipped it through there, but nothing really substantial, no impulsive breakdown. So we still don't have a breakdown on that one, and that support is holding. Now I think we're going to get it, but we obviously could bounce, we could bounce here. And this is support. It's holding so far, so we could get a bounce and then roll over. I still see us coming down to this $59 area, whether we bounce here or not. I still see that big negative divergence on AMD. So I'm likely going to hang tough on this one. Any kind of bounce we get, I think is going to be pretty muted. They're going to just move it up maybe a little bit, and then it'll roll over. I still really like this for some more downside. And this is a pretty thin zone right here. So any kind of break, once you get that sell signal, that breakdown, I think it's going to be a pretty swift move down. Might come in the form of a gap or something. So, yeah, I'm going to probably hang tough on this one and just remain short. Snap just bouncing a little bit. Next level of support on Snap is about 48.80. And then we've got the 200-day moving average kind of right below. So I think we're going to dip down and hit that 200-day moving average. And we do have this huge gap in Snap way back here going all the way to 29 bucks. So that would be a final target on this, would be a move down to about 29 bucks. from where we're at now, that's a pretty good size move. I still like this short. I'm remaining short. And Lyft bouncing a little bit today. So you have to remember, Lyft broke trend right up here. This was our sell signal way up here. So, if you took the sell signal, let's say you just took it about the midway point, you're still profitable by over 10%, even with today's 7% bounce. And, we were profitable by about 17% just in a matter of, a week and a half or so. So that's your sell signal, and that's still intact. Nothing's technically changed. So I think that if we're going to bounce, we could bounce anywhere up from 50. Well, we're bouncing now, so we could run up to 50, 70, possibly up to 5180, 5190, maybe run up and do a back test. That's always possible. I think, watch the broader markets. And if the broader markets are starting to break to the upside, then yeah, Lyft could run up and do that back test. I don't think we're going to want to ride that one out. So I'll likely stop out if we start to break, back above here and take some profit home. But if we get rejected at one of these levels, I still think we're heading down. We haven't even hit the 200-day moving average yet. So I think we've got a date with that. And that's around 43.50. There's a level of support right there at about 43.50. So I think we run down and hit that level of support. And then we'll see. We'll probably bounce there. I think we'll get a bounce there. And then final target on this, if it's going to do it, would be about $32. You got a big gap right down there. And I think a move down to $32 that's going to be the final target on this trade. Okay, Boyd Gaming, BYD. This is a short idea that we talked about recently. So this one, you had the negative divergence, and that's your divergent high. So you look for a break of trendline support. We got that break this week. So, this trend goes all the way back to March 2020. Nice cleanup trend right there. There's your breakdown. We're bouncing. So, here's how it's going to play out. We're probably going to bounce around, grinding around sideways, and then eventually just break down. All right, unless the technicals change and we're able to regain this trend, then the trend will have changed. So next level of support, I think there's a very high probability that we hit that, which is about 55.37. I put a very high odds that we're going to hit that level and, grind around sideways till we break that level. And then head down to 43.90. And yeah, those are kind of the levels that I have right now. So, a little bit of a counter trend bounce today, but I still think the trend is, this uptrend was broken right there. So I think the trend is now sideways or down. And so, yep, that's what I'm seeing in that one. Draftkings. So Draftkings, basically, here's your broken trend right there. Impulsive sell down. So we could see a good sized bounce here. We might bounce up, do a back test of that trend line. Ultimately, and we're kind of in the middle of the range, so there's nothing, you wouldn't want to take a position here. But if we bounce, that would be an objective area to short. And I think next level of support is about 35.40. So again, where we're at right here, I don't know whether we're going to bounce or just sell off. It's hard to call because we're right in the middle of the range. Could go either way. But I think that bigger picture is whether it goes up, I still think it's going to go down over the near term. And GDX still hanging in there. GDX has been hanging tough the last few days. Not really moving up, but not moving down too much either. So we're just kind of consolidating, kind of chopping around in this area above the 200-day moving average on GDX. So that's something to look at. And I don't see any change in trend. This was a downtrend, big correction. We broke out. There's your breakout. There's a back test of that trend and confirmation that we're in a new trend. So as far as I can tell, gold and the gold miners still look like they're in a new uptrend, and that is continuing. And we'll wrap up with commodities. So commodities look like they're pulling back a little bit. Might be a good opportunity to buy into some of these commodities if you don't own any. Here's an uptrend that wheat has been in right there, and you can see wheat had negative divergence on the here on the RSI, and it didn't really have it on the PPO, but it had it there on the RSI. and I don't know where my RSI label went, which is funny. But you can see there that we broke trend right there. So I think we're heading down. Wheat's likely going to head down to about 650. That's the next level of support. That's probably where, you know, I'll be interested in buying into some wheat. Corn, you can see broke trend right here, and clear breakdown. So corn has a ways to go. I think corn could potentially go, you know, we have a little bit of support right in here at about 1988, but I think corn could potentially go all the way down to about 1760. Clear level of support right there. That was former resistance, should be support now. So I wouldn't be surprised if we head all the way down there, maybe dip below it briefly, but I think that area will hold. And that's still a move from where we're at down to, that's about a 14% correction. So I think that looks like an area, objective area to buy. Coffee, you know, coffee I don't think has too far to fall, but I think coffee is probably going to head down to, could go all the way down to this 39.92 or potentially this 40.70 area. 40.70 you can see was former resistance. We broke above that, pretty impulsive. So I think this 40.70 is probably, you know, it's about 40.71. That's an objective area, I believe, to go long on coffee. And then lumber broke trend as well. So here's a clear uptrend in lumber, and we just broke the other day, and it's just been selling ever since. So that looks like some of these ag commodities are going to come in a little bit. They've been running pretty hard, so nothing goes straight up. But they, bigger picture, if I just look at like corn and we look at the daily chart, from my perspective, you can see there's the bigger picture. And this is the cleared bear market that corn's been in, and clearly we're not in a bear market anymore. This is the first leg higher, or the first rip higher in what looks to be the start of a new bull market. So bull markets, you want to buy at support. And so, you're going to get corrections along the way, but when you hit support, those are areas to buy. So as far as I can tell, and you could probably draw a trend line down here, something like this. Yeah, see how that comes in perfect with that level. So there's, from what I can tell, the start of the bull market trend. And you can see if we were to sell all the way down, we're going to hit dual support if we, right in this area. That's the area that, I'll just circle it. That's a very objective area to buy or go long corn. All right, so I'll be looking to do that myself. That's all I got for this morning, guys. Leave me a thumbs up. Let me know what you guys think. Point out any stocks. I'll try to scan through some of the comments for over the last couple days, and I'll do a live. I'm going to do a live session tomorrow at 10 o'clock Pacific, 1 o'clock Eastern time. So feel free to jump on that and ask me any questions that you guys have. I usually get on for about an hour and just go through the charts with anybody who's interested. So catch you guys tomorrow. Unless anything crazy happens, that'll be my next video will be tomorrow.